Welcome to the Italy Advantage, your monthly guide to smart living, investing and thriving in Italy. This is Matilde Sperlinga, and whether you're an expat, investor or entrepreneur, we break down the legal perks, tax wins and hidden opportunities you need to know. Let's unlock Italy potential together. First up, we'll decode Italy's new residence tax scheme, explaining how the flat tax works. Then we will look at the tax perks for foreign pensioners in Italy, and finally, the expat tax advantage for international employees. We open this edition with updates on Italy's tax flux for new residents, a game changer for relocating expats. Our country, in fact, offers a facilitated tax regime for the so-called new residents, so for foreign citizens who decided to elect Italy as their new tax residence. What does it consist of? There is a flat tax of €200,000 per year on all income earned abroad, regardless of the amount. To this sum is added €25,000 for each family members, eventually included in the regime. To enter, it is necessary not to have been resident in Italy for at least 9 of the last 10 years, and to indicate the option in the tax return for the year of the transfer or the following year. The regime lasts up for 15 years and still allows you to work or do business in Italy. Beware, however, income generated in Italy continues to be taxed according to the ordinary rules. Those who are interested may submit an advanced tax ruling to the Italian Revenue Agency. We remain on the subject of tax benefits, with a legal measure dedicated to foreign pensioners who are looking to Italy as a destination for their new life. For those who decided to transfer their residence to a small southern municipality with fewer than 20,000 inhabitants, there is a reduced substitute tax of 7% on pension income paid by foreign entities. The requirements? Not to have been resident in Italy for the previous 5 years, to come from a country with tax agreements in force with Italy, and to move to a region in southern Italy, such as Sicily, Calabria, Puglia or Sardinia. The facilitation has a duration of 9 years and is applied through the tax return. The objective is twofold: to offer quality of life to those retired and, at the same time, to stimulate the depopulation of less central areas. And now, let's change perspective. Not only retired investors, but also workers can benefit from important tax advantages if they choose Italy. The so-called impatriate regime, in fact, allows taxes only 50% of worker business income up to a maximum of €600,000 per year. To enter, one must transfer one's tax residence to Italy, not have been residents in the previous 3 years, and commit to stay at least for 4 years. In case of return with the same employer, the minimum period of stay abroad increases to 6 or 7 years, depending on the case. The scheme lasts 5 years and it is aimed at highly qualified workers. But beware, those who leave Italy before the deadline lose their tax benefits and will have to pay back what they have unduly enjoyed with interest. That's all for this edition of the Italy Advantage, where we turn Italy complexities into your opportunities. Got questions? Reach out and follow us for next month's updates. Until then, I'm reminding you, Italy isn't just a dream, it's a smart move. Arrivederci.